It's finally happening. Can you believe after over a year of Fed rate cut talk, we have reason to believe it's on the horizon? Stay tuned. Let's get into it. What's happening? It's time for another San Diego County housing market for the month of July 2024. But before we dig into those numbers, we have to take a step back and look at the economy as a whole because we got some pretty positive news from the most recent Federal Reserve meeting and Chair Jerome Powell. This one's going to be kind of data heavy, but it's positive, so hang in there with me and I'll help you break it down as we go forward. So, what happened in this meeting? Pretty cool stuff. It's basically all surrounding the CPI, the Consumer Price Index. July saw some positive numbers from June with the CPI dropping 0.1% when compared to last month. 0.1%, are we really getting excited about this, right? Seems pretty small. Well, we've seen increases nearly every month this year and previous months, so it is kind of a big deal. And, June's year-over-year numbers, they actually rose as they always have been every single month this year, but lower than expected. They rose 3%, and last month's year-over-year numbers were at 3.3%. So yes, we are focusing in on tenths of a percent when it comes to CPI, but that's just the way it goes. Fed Reserve Chair Jerome Powell, he's always super cautious with his language. It's almost like an art and a science, reading the tea leaves to figure out what he's really trying to say in these meetings because he never wants to overstate or understate his position or give the market some sort of reason to react in a crazy way. But we got a pretty strong quote out of him this time. He said, "No longer do we have an overheated economy." That's a big deal when it comes to the type of language he chooses to use. And it really confirmed that he's on the same page with all the investors and traders in the stock and bond markets out there. So it really boosted confidence in the Fed futures market. You're probably thinking, what the heck is the Fed futures market? It's interesting. It's actually a place where investors essentially bet on what will be happening with the Fed funds rate. Before this meeting took place and we got these new CPI numbers, that 70% confidence is referring to a 0.25 or quarter of a percent drop from the Fed when they meet. After the most recent CPI data came out and we got our remarks from the chair, those traders have changed their tune and that figure has risen to 95%. They are betting the farm that we're getting this cut in a couple months, and it couldn't be more welcome. What's more is that the expectation from these traders is that we can see up to 6 cuts in 2025 from the Fed. Pretty crazy. So this is super positive because so many people have been waiting for the Fed to do something different for a very long time, and it seems like it's finally happening. Now, let's get into our local market. What figures do we have from the local board of realtors to help us understand where we're going from here? Well, before we get into what we call leading indicators, we're going to update you with what is important information, but something we consider lagging indicators, kind of telling us where we've been. One of those lagging indicators is the average sales price. It's up 10.6% from this time last year to just under $1,230,000 is the average sales price as of last month. Last year, this time, it was $1,112,000. So the numbers have risen, which came a little bit of a surprise to me. I didn't think that jump had been that much over the past 12 months. The next indicator that we're looking at that kind of tells us where we've been is the amount of new listings coming on the market each month. That number's up almost 7% at 6.9. And it's just under 3,000 properties, 2,992. And last year, this time, it was 2,800. So it's not a huge jump in actual homes for sale, but the percentage is at 6.9%. Now, similar to the new listings coming on the market, how many listings are going off the market in the form of a closed sale? That number is down 7.6%. We had just under 2,000 last month at 1,931, down 7.6% from 2,093. So again, not a huge swing in actual amount of homes, but the numbers are showing a trend for sure. We've got more properties coming on the market each month and fewer going off. So it's probably going to tell us that our overall inventory levels are increasing, which we'll get to. Now we're going to move into some of the figures that help us understand where we're headed, or those leading indicators. The first one I'm going to address is the list to sales price ratio. And basically what we're answering with this question is, if you were to put your home on the market right now, what percentage of that ask price are you going to get on average given the market environment right now? So the answer is 99.5%. So almost 100% of your ask price is probably going to come in, assuming it's priced right and presented well. That's actually down 2.3% from just over 100% this time last year. It was about 101.3. So in either way, we're kind of flat. Nobody's offering hundreds of thousands of dollars over asking on average in this market, and people are not lowballing and getting deep discounts on properties either. For the most part, people are getting what they're asking for, and that's helpful if you're thinking about doing something like this in the near future. Another one that's helpful is, how long will it take me to sell my home? What is the days on market? Well, we are actually increased a little bit from this time last year. We're just under a month at 28 days. It's up what seems like a really big number, just under 22% at 21.7, but the number last year was 23 days. So not a huge change, and overall it's significantly shorter than what we'd see on a market average, or in what we might consider a neutral market, which could be upwards of 60, 70, 90 days in some cases. So it's a lot shorter than that, but it's nothing compared to what we became accustomed to during the COVID years, where properties were flying off the market inside 1 week. The inventory numbers are some of the best ones we can use to help us know where the market as a whole is headed. So we measure them in months supply of inventory, and right now we have 2.3 months supply of inventory in the San Diego County market. And that's up, and it seems huge because it's up 53%, but that's up from 1.5% this time last year. Now, what does this mean, these inventory numbers? Well, basically, at 2.3 months supply, if we were to carry on selling homes, helping people buy, and not add one new listing to the market, we'd be out of them in just over 2 months. There'd be no more new homes to buy. So this month's supply of inventory is up from last year, but in a neutral market where we're not really a buyer's market or seller's market, we typically have 5, 6, and sometimes a little bit more months supply of inventory. So even though this number is rising, it is still representing a solid shortage of housing inventory in the county. So what do we make of all this data? Maybe you're not really a numbers person and it's kind of making your eyes roll back in your head. Basically, all these numbers are pointing towards a largely flat market for the immediate future, for right now. But all that can change quickly if and when interest rates drop or the economy really starts to improve. And check this out. A recent Newsweek article stated that on a national level, every time 1% is peeled off that mortgage offering rate from lenders nationwide, we are adding 4 million new buyers to the market with 1%. So what does that tell you? If you're thinking about doing something in the near future, timing might be great right now. Whether you're a first-time home buyer or thinking of making a move to something smaller or moving up because you need more space, you're going to have less competition in general right now, certainly than there will be towards the end of the year and the beginning of next year, when we are likely to see improvements in rates. Now, that'll just be the beginning of what we hope will be further improvements, but moving into 2025, you will still be able to benefit from those improving rates if you make a move now, but waiting till later means almost a guarantee of higher competition and rising prices. So I hope some of this was helpful. I hope you stuck with me through the end of this video here. And of course, I'm always happy to chat further, take this conversation offline, or answer any questions you might have. I look forward to talking to you soon.